What's up, traders? I'm Hotshot. Today is going to be volume 3 in an ongoing series of what I like to call This is Better Than ICT Silver Bullet. It's pretty much my own ICT pattern recognition series. If you have not already seen the first video in this series, it is 56 minutes long, it is volume 1. You can go to my channel. I have a public playlist. You can go watch it right there. Make sure you watch that before you watch this one here, so that way you don't get confused, and that way it provides you the foundation we're looking for. So as we're looking here, we have USD CAD. We see that price recently ran up above this high here. This is an expansion leg where we would then take a fib from the low down here up to this high here. You can see that it retraced down into optimal trade entry, turned around, began taking off. So we are bullish. We're anticipating previous day's highs to get ran out. So we were anticipating this previous day's high to get ran out. Okay. Again, yes, this is hindsight. I threw a disclaimer out there in volume 1 of this series. Make sure you go watch that video so you could really understand what I am delivering to you in the series. So we're going to drop down to our 5-minute time frame. We're going to delineate our 8:30 to 11 time frame window. And you can see here that price actually had these highs here. You can see that there was this bigger optimal trade entry that was playing out, came down, and this was before 8:30. Remember, our entry has to come at 8:30. And you can see right here that this candle was still in 8:30. Let's go to the 1 minute so we can see really quick. So on 1 minute at 8:30, once 8:30 opened, you can see the 1 minute candle was still in optimal trade entry. So our entry would have been right there. As soon as 8:30 opened, we can enter if we're in optimal trade entry, which we were here. Okay, I'm going back to the 5 minute now. So our entry is there, right? Oops. Now, sticking to the rules, your entry will always be at 0.62 level. Stop loss will go, if you're a buyer, below the 1 level to the next institutional level, which would be the 0 level here. First take profit will be 0, and of course, the Fibonacci is not magic, it's the draw on liquidity that is. It just frames it's a framework where it's just literally framing what we're actually trading, and the true, what we're drawing to is the previous day's high or low. That's the foundation. Okay. So anyways, you can see we enter there. Here is your first take profit area right here, the 0 level. First take profit hit where you would take partials. Second take profit right here, the next 0 hit. Next take profit, 0 hit. Next take profit, 0 hit. And from there, you can see that it's still going up. And with your stop loss, as soon as this level gets hit, you'd want to make sure that your stop loss is at the 50 level. So in profit, in case price wants to come all the way back down. As soon as this and this got created, we're putting our stops right below there. We're trailing stop losses, right? And even if you wanted to too, like this was a low and this was a low, you could put it down here. You would have got stopped out, and that's totally fine. You would have been stopped out in profit. But if you had your lows right here, and you would have still been, going right now, this is a current, so we would have our stop loss right below this one here. And we want to see if it hits the next level, which is going to be here. And if it hits here, then we'll claim full targets. At this point, probably should have already claimed targets because it is, it's a new day. You don't want to get caught up in swap fees. Really, ICT didn't say it, but I would prefer, and this might be a rule for myself, I'd prefer getting out before 16:30. Okay. But that's the example in USD CAD. There was also an example in USD CHF today. USD CHF, we see right here, price is in this expansion right here, where it took out these highs here. So what are we gonna do? We're gonna draw our fib from here to here. Why? Because this swing low up to this swing high, you can see it retraced into optimal trade entry. It's now turning around, expanding, targeting this liquidity. So we're bullish, targeting previous day's highs. So for today, we wanted to see this high get ran out, right? So we're gonna drop to the 5-minute. Let's go look for our setup. 8:30 to 11. Boom, boom. And you can see right here, there's this big expansion that took out all these highs over here, all this liquidity, relative equal highs. So you would draw your fib from the swing low right here, boom, up to the swing high. See how it made this high, and then it made this higher, up to the swing high here. And it came down 62, remember, that is where we enter, boom, stop loss down here, right below the level, to the next 400, boom. First target up here to the first 80 level, institutional level, which will be right there. Targets hit, so we'll claim partials. Stop loss, we'll go right here to the 50%. You can see that it came out, stopped us in profit, so this was a winner. But you can see here, here's a second opportunity. You can see if we would have drew our fib, because it took out this high, right? We would have drew our fib from here to here. Let's say we were looking for an entry here. We would have lost. However, if we would have dragged our fib from here to here and considered this a liquidity run, a turtle soup, to then go the true direction, again, go watch that volume 1. I explain this. You want to drag it. I explain exactly what you want to do in a situation like this. You can see here, whenever it got ran out, it was down here in optimal trade entry. Let's say you took that entry because you've seen it. Stop loss will go right here below the 0 level. Boom. First target up here. Pretty much lines up with the 0, so we're going to leave it right there. You can see targets were hit. Stop loss will go to the 50%. So if price comes back down here and stops us out, we won 2 trades today and only lost 1. So, and then with USD CAD, you already know what happened there. So optimal trade entry, this is going to be volume 3. It's going to be added to this playlist. Make sure you go and watch this playlist. All right, study it, take notes. Until next time, thank you guys for watching.